It's only 3 months. Over time, this is definitely going to be a positive catalyst. It's going to bring new investors into the market. I think, though, what's interesting about this era of Bitcoin, it seems like the fourth time this thing has survived like a world war. I mean, Bitcoin is like a cockroach in terms of its ability to like come back from the dead. And that's why I respect it. It isn't going away. I think it was supposed to go away 3 times now. So I think now we're at this more mature level of like the mainstreamification of Bitcoin. So I think institutions don't need to wait for a rally. I think they're sort of like looking at everything and going, okay, it's not a currency, but 2 things. 1, we don't want to kick ourselves if it goes to $1 million. I call that like future FOMO cure. And number 2, everybody's sort of awakening the fact that like the dollar has been devalued and inflation can steal your money and you get less of your actual returns. Your real returns are less than what your portfolio shows. And this could be a way to protect from that because it's, again, a store of value. So I think for those 2 reasons, even if people aren't true believers, they might be interested to allocate to it. And so I think that's pretty powerful. Even if it is not quite regulated and banks can't even really deal with it, those big institutions getting involved, BlackRock, Fidelity, et cetera, I think are really, really big moments. If everybody had just hodled, the price would do God candles because there was only buying for a couple of weeks there, big buying. Sometimes the ETFs are netting $1 billion a day. And people are selling those. And the higher it goes, the more they'll be tempted to sell. Now, I heard hedge funds are starting to short Bitcoin, and you can tell there's definitely a little tug of war in the price, but there'll always be people trying to short. But for now, from what I've seen, almost all the action is on the long side. To me, the people selling Bitcoin, you've got people who have owned Bitcoin for a long time who are cashing out. And I don't blame them. Like, you own Bitcoin, you were early, you probably want to get a house. Maybe you got married. You need cash. So I could see some continued selling pressure as the ETFs grow. But over time, again, it was $30,000 less than a year ago. So that's the big picture I think people miss sometimes because they stare at a screen every day and like they forget that it's only been 9 months since it was 30,000. That said, this ETF catalyst is real. They say as a customer, you can only get 2 of these 3 things: fast, good, cheap. Right? If it's fast and good, it's not cheap. If it's good and cheap, it's not fast. ETFs are all free. And this is why just being in the ETF, it's only 3 months. Over time, this is definitely going to be a positive catalyst. It's going to bring new investors into the market. ETFs are the preferred vehicle of most professional investors and especially advisors. They're fast, they're good, they're cheap, they're easy. It opens up a ton of new investors. So I think the price largely is moving off the ETFs. I've seen some days where the ETFs taking money, the price still sells off. So remember, ETFs only own 4% of Bitcoin so far. It has to be pretty huge because I've been ever since the BlackRock filing last June, Bitcoin I think was around 30,000. And since that filing, there was more and more good news, and it was sort of like a buy the rumor, and that drove the price up 60%. When they approved it, there was a little bit of a sell the news event there, but then the inflows were so strong. But then they had this really big second wind, and it's really rare, even for a hyped up new launch. Normally there's fanfare the first couple days, then it kind of like settles into an equilibrium, and then maybe down the line it catches fire again. Who knows? This one like caught fire like in the 4th week and went straight back up in terms of flows, and I think that helped the price kind of come back because, in my opinion, it feels like there should have been more pullback after the sell the news because you go up 60% in anticipation. Normally, there's a sort of come down that's way deeper than we saw. So I think that the robustness of the ETF flows helped sustain the run up and then some. So I would say for now, yeah, the ETFs are a big deal. The launch was really tremendous. It sort of cooled down a little bit the last week, but overall, we're talking about 12 billion in net flows and 55 billion in total assets. Our predictions had those numbers after 12 months, not 3. So that just tells you where they are. And I thought we were one of the more optimistic teams out there. So they've kind of already reached our 12-month predictions in 2.5 months.
But when you say that ETFs have drawn new investors, who are these new investors, Eric?
Yeah, so there's 3 main types of investors. Retail, those are like do-it-yourself people who have brokerage accounts. Then there's advisors. Financial advisors, they're like wealth managers. If you have a lot of money and you need help with like taxes and estate planning and all that, they will help you and they'll like build your portfolio and whatnot. Those people manage $30 trillion in America. And that's where the bulk of the money is. That's the crowd this ETF is namely going after. and they love ETFs. ETFs are their favorite vehicle to use for anything. So they're very comfortable with them. They trust them. They use BlackRock ETFs all the time. So that, to me, is the main market that would open up with the ETF for Bitcoin. Then you have institutions. This is like professional traders, hedge funds, endowments, pensions, big, gigantic asset owners. They are probably going to use the ETF, but they'll probably only use the one that's really liquid. They love liquidity. I don't think they'll use it tremendously, but they have so much money. If they 1% allocation, that's a ton of money. So I would see that down the line, the owners of the Bitcoin ETF are, maybe 20% retail, 60% advisors, and maybe another 20% institutional. But so advisors to me are the main market here. And again, 30 trillion is a ton of money. So if they were to apply just a 1% allocation to Bitcoin, it's going to add up pretty quickly.